Good morning, everyone. Thank you for joining us here today. I'm Holly DeVito with Sum of All Numbers, and we are so excited to have Mike Michalowicz here, from the author of Profit First. Thanks for joining us, Mike.
Oh, it's a pleasure to be here. Thanks for having me, Holly.
Absolutely. So a little background on Mike, his bio. Mike is the entrepreneur behind 3 multi-million-dollar companies and is the author of Profit First, The Pumpkin Plan, and what Business Week deemed the entrepreneur's cult classic, The Toilet Paper Entrepreneur. Mike is a former small business columnist for the Wall Street Journal and the former business makeover specialist on MSNBC. Today, Mike travels the world as entrepreneurial advocate, speaking to groups just like ours. He's globally recognized as the guy who challenges outdated business beliefs and teaches us what to do about it. So it's my pleasure to have him here today to talk to us about Profit First.
Yeah, so let's dig right into it. We wanted to get right to the content. Excuse me. I'm actually talking about traveling, Holly. I'm leaving tomorrow to go to Australia for the first time in my life to tour Australia, to speak on Profit First, and then I'm going to India in December now to 10 different cities, believe it or not, to speak about Profit First.
That's
and
cool.
Yeah, I can't wait. And the message I'm going to be delivering there is identical message to what I want to deliver to you. Profit First is agnostic to where you're located. It's agnostic to the business you're in. It literally can work with any industry, any size business, any location, because it follows some basic principles. In fact, what turned me on to the system was my own challenges. As Holly, you were kind to share, I built and sold some companies. But one thing you didn't share is, as I was building those companies, they were struggling. I struggled to pay bills. I remember in my second company, at a certain point, we had grown to almost 30 employees, and just sitting at home at night, just rocking back and forth in pure terror, thinking, how am I going to cover payroll next month, which was well over $100,000. How am I going to pay payroll next month if I don't get a big sale in today? And I couldn't refinance my house again because I had refinanced it for a third time, and there was no equity left. And what I found for my business, and so many business owners, we live in this stressful check-to-check survival, hoping, starving, panicking that a sale will come in just to carry us one more month. Well, I ultimately came across a statistic that blew my mind away. There was a study conducted, in part the SBA was involved, and I actually don't even remember the originating parties anymore, but I'll never forget the statistic when I heard it. The statistic was that 83% of small businesses are surviving check by check. Now, just to put context around this, if you're based out of the U.S. watching this, there are 28 million small businesses in the U.S., and a small business, as defined by the SBA, is a company that does $25 million in revenue or less. That is my company, Holly. I know as you're, everyone listening, I suspect it's your company too. And of us, 83% of us are not profitable. 83% of us are just getting by. We are dying to get that one sale in to cover payroll or to cover the rent or just to pay ourselves something. So I thought, what's wrong with us? And it's a challenging thought, because that also means at the same time, while we can't figure out profit, we do figure out how to get the sales going. We're selling to our clients. We do figure out how to deliver our products or services. We do figure out how to have them come back to us repeatedly. We figure out the admin, the marketing, the employee management, everything we need to do. I mean, there's thousands of pieces to making a successful business, yet we can't figure out profit. Well, there's not, is there something wrong with our brain? There's like a lobotomized part of our brain that can't figure out profit. And what I determined is there's nothing wrong with us. What's wrong is the system that we've been told to use, that it doesn't work with natural human behavior. And therefore, it results in a lack of profitability. Now, the formula we've been told to follow, it's a traditional formula called GAAP. It's based on GAAP, which stands for Generally Accepted Accounting Principles. These were formulated, the core to accounting was formulated 150, 200 years ago. And ever since accounting became an established mechanism, we follow the core GAAP standard. And the foundational formula of the GAAP is our sales minus our expenses equals profit. And I suspect every person Every person on watching this right now knows that formula, right? You have to have sales. You then have to incur an expense to grow your business, to support those sales. And then what's left over is profit. The problem is when profit is a leftover, it's a last consideration. So behaviorally, when something comes last, it means it gets ignored or delayed. And I bet you, Holly, many people can relate on our webinar right now that you go to your accountant or bookkeeper as the year end approaches, you get that, I have a pad of paper here, you get out that accounting statement here, and you kind of go through it. And at the very bottom, the accountant circles it and says, sorry, you had a loss this year. And we look at that and say, oh gosh, I need to be profitable. Maybe next year our return will be profitable. Literally, we kick the can of profit down for another 365 days. We'll go another Christmas. We'll go another Valentine's Day. We'll go another birthday. We'll get all the way past that and see if we'll be profitable next time. And then when it doesn't happen again, we kick the can down the road for a year, continuing this check by check survival. What I found is that profit can never be an event, a future event. Profit needs to be a habit. Maybe that's something everyone wants to write down. Profit is not an event. Profit is a habit. It needs to be baked into every transaction in your business, every moment of your business. Today, when the next sale comes in, there better be a profit component in it. At least that's what I came to understand. And what I want to teach you, at least the basics right now in our little bit of time together, is how to get profit first at least started. Now, let me pull out something that you maybe are familiar with. This is my iPhone in a fancy schmancy case. And I suspect you use your phone, your smartphone, to do what I call bank balance accounting. Now, going back to my accountant, he told me, Mike, you got to read your balance sheet, tie that into your income statement, make sure that ties back to your cash flow statement, make sure you run the critical metrics, the OCR, which stands for operating cash ratio. Make sure you have your other metrics in place. And then, after you tie it all in together, never look at your bank account. Never. That's the worst thing you do. Understand where all your numbers are. Check that monthly or even weekly, ideally daily, and you'll know where your business stands. And so what did I do as an entrepreneur? I said, that sounds great, accountant. I'm just going to log into my phone anyway and do something that's really easy. I call it trust my gut. I look at what my balance is in each account, or my one checking account, that one primary checking account. I see what the balance is, and based upon what I see there, I make a decision. If I have a lot of money, business is good and I can spend money to grow. If I have no money, business sucks. And I panic and I start doing collection calls and so forth. But I trust my gut. What I found is most entrepreneurs, I suspect many people watching right now, that we revert to bank balance accounting, seeing how much money is in our bank account and making a determination based upon what we see on how to run our business. And for 150 years, accountants have been telling us, don't do that. And for 150 years, us entrepreneurs have said, sorry, this is how I run my business. I found if you want to have success in anything in life, don't try to change your habits. It is extremely hard, if not impossible. Instead, change the system around your habits to get the result you want. And that's what Profit First is. So I'm going to walk you through the 4 core steps to setting up Profit First. I'll draw it out on my pad of paper here, and instead of using a slide deck, this is how I roll. I'll just show it to you on the screen. But I suspect, and maybe in the chat, my chat's blocked right now, but I always move this over my screen. In the chat, I just want to get a sense for this. How many people, and be honest here, check your bank account at least monthly to see what your bank balances are? And just continuing that thought, do you check it more frequently? Do you check it weekly or daily? So if Tim says daily, I'd love to hear what you guys say. At least Tina says at least daily. At least daily, Tina. I am with you. I check my bank account hourly. I already checked it twice today, so I'm with you. I want Barrick and David daily. I'm the same way. Tara daily. I see that I check in daily, usually multiple times a day to see did some checks come in last night, or maybe a check is clearing through now. Did that check clear? The fact that many of you are saying daily is exactly what I wanted to hear, that you're checking it regularly. That means that's your established normal behavior. Now, I got one more question for you, and please be just as honest with me. How many of you, just answer in the chat, have one primary checking account. And what I mean by that is that all your deposits go in there and you pay all your bills out of that. That's what a primary checking account does. Do you have a primary checking account where you put your deposits in and pay your checks from? So Tara says she does. Anyone else have that? Lori, okay, excellent. Gene, good. David, good. Tim does not. Okay. Anyone else? Amy, good. Okay. If you have that one primary checking account, that's what I had for the longest time. That's the one systems change we need to make that daily behavior of checking our accounts every day to become our biggest ally. So here's what I want you to do. The Profit First methodology, and I see Barrick and some other people have multiple accounts already. Tim, based upon the Profit First plan. Awesome. Awesome. Maybe you'll be teaching this next go around. I hope, Tim. I found, and Tim, you can acknowledge this, I found that we need 5 foundational accounts, 5 basic accounts. And so let me draw out what they are and explain why we need these. The first account is going to be called our income account. And I'll explain what that does for us in just a second. The second account is going to be called profit. The third account is going to be called owner's compensation. The fourth account is going to be called operating expenses. I'm sorry, the tax. And the fifth account is going to be called operating expenses. It's kind of hard to speak and write at the same time. But here's the 5 accounts. And I'll tell you why the chart like this in a second. But these are all bank accounts. Literally, you go to your bank and you set up 5 accounts. They can all be checking. Actually, Holly specializes in this. She may give you techniques to actually reduce the potential for any fees. We don't want, of course, to have any fees, and to increase savings and interest. So maybe these are savings accounts. She would walk you through that. But for now, just understand these are 5 bank accounts. What do these do, and how does this work? Each account acts as an envelope, or I call them plates. But the reason I like to refer to envelopes, have any of you heard of the envelope system? If you have or haven't, just post that in the chat. I'd love to see that. The envelope system is something I strongly suspect someone in your family tree has done. Good, a lot of yeses. My mother did it. Holly, I'm sure you or your mother. Yeah, Dave Ramsey is a major advocate for this. The envelope system has been around forever. There's a book called The Richest Man in Babylon talking about how back in the BC days, the envelope system was used. My mother, how she did it, she worked at a factory literally down the highway from here, not too far from where my office is today. And she worked part-time. She'd go to work and she'd come home and she'd cash in her check. And then she would divide money up into different envelopes. One was the food envelope. One was one for the mortgage. Another one was for the give back to the community and the church. Another one was for an emergency. Another one for vacation. And they all had percentages on it. And when she came back, she put a percentage into the food envelope and so forth. And then when she went food shopping at the end of the week, she would grab the food envelope, put it into her purse, drive to the food store, and shop with what was in that envelope. And she always had enough money. Now, I don't want you to confuse that with having the same amount of money. Her income had some volatility. Sometimes she was sick and she didn't work much that week. So the percentage going in, while constant, the amount would be less. Other times she worked overtime. So she got more pay. The percentage for the envelope's the same, but the total contribution is larger because the larger purse where it's coming from, or the larger income. But she always had enough money because she would make do with what was in the envelope. The instruction was this envelope was to be used for food and food only. So she pre-allocated money to its purpose. And yeah, sometimes it was rice and beans for dinner. Other times it was a chicken dinner or something like that. What we're doing here for our business is we are setting up different envelopes. Now, these are the foundational 5. And when you work with Holly, you'll find out there can be a lot more, and you can customize this for your business. But these are the foundational 5. So let me explain what each one is. And I'll hold it a little closer to the screen so you can see it. The first account here is called income. That purpose of that account is to act as a serving tray. It's the big plate, kind of like Thanksgiving dinner, right? The Thanksgiving dinner comes out, that big serving tray comes out. There's that huge golden turkey on the serving tray. I suspect you maybe spend Thanksgiving with your family or some friends. I suspect what happens is that turkey comes out. No one says, hey, everyone grab your knife and fork, just stab into turkey. Every man for themselves. Everyone dig in. Of course not. Of course not. Instead, you carve the turkey. It's even a tradition now, the carving of the turkey. And why do we carve the turkey? So we can apportion a portion of that turkey to every single plate. The income account acts the same way. This is your serving tray for your business. Money will pile on there, but we'll never eat off that plate. We'll never dig into the turkey sitting here. Instead, we're going to carve up our income and transfer the money to the different plates. This plate here stands for profit, or it says profit. What profit is, so we're very clear, profit is a reward to the owners of a business for starting the business in the first place, for taking on the risk of getting equity in your business. That means either you bought your business or you started it from scratch. Either way, you possess equity. I own public stock. I'm not condoning or supporting Ford, but that's the stock I own. Ford, among other shares. Ford does a quarterly profit distribution. When they sent their check to me, and the last one was like $13.22 or something. When I got the check, I didn't look at it and say, "Oh, this really should go back to Ford. You know, the management team really could do something with this. I'm going to send the check back. Grow, Ford, grow." No, what I said is, I invested in Ford. I took massive risk in putting my own money into this company. The stock could go down. That's a reward for me for taking risk. So when the money comes out to me, I spend it on me. And that's what profit is in your business. This is an allocation of money to reward you. It's a reward mechanism for doing something extraordinary. You did something that 95% plus of the population in the world doesn't have the courage or intelligence to do. You started a business. You're an entrepreneur, and this is a reward for being a shareholder in your business. The next account, called Owner's Comp. This account is to pay you for the work you do within the business. Profit is a reward for owning a business. The owner's compensation is your reward for working in the business. You are serving in some capacity. Maybe you're the visionary. Maybe you are the best salesperson. Maybe you're the operator. Maybe you're the one maintaining the office and cleaning. Perhaps you're all of the above. This is your compensation for doing that work. Now, just like going back to that Ford example, when I own Ford stock, I didn't get this, I don't own stock and assume, oh, because I own stock, I can just take a drive over to Dearborn, Michigan and tell Ford, "Hey, I'm on board, guys. I want to be the lead engineer. I'm here." No, I would, of course, know if I want to work for Ford, I also have to be an employee. I have to actually apply for that position. So profit is simply ownership in the business, and you get rewarded for it. Owner's compensation is the compensation to, in your case, the most critical employee in the business. I suspect you bring more value to your business than any other employee, and therefore we need to reward you, pay you as the most important employee. Next account is called tax. Tax is money that we allocate to pay our tax liabilities. At the end of the year or quarterly or even out of your auto deductions, depends how your business is set up. Holly, I know you help people configure it exactly perfectly for them, but based upon how your business is set up, your business will, in all cases, address your tax liability for you. I know you've started your business in part for financial freedom, right? Well, isn't financial freedom not having to worry about your tax bill? The answer is hell yes. By the way, if you want to put that in the chat, hell yes. My business should be taking care of my financial liabilities like tax for me. So that's what we're going to do here. The money that goes into the tax account is used to pay your personal tax liabilities and any other corporate tax liabilities we have. And even if you have an S Corp or a C Corp or an LLC or an LLP or sole proprietorship or a hybrid, it doesn't matter what you have, what country you're in, this money is reserved for your taxes and either can pay the government directly or reimburse you, but the taxes will be taken care of. This final account is called OPEX. That's the cool acronym for operating expenses because, you know, I roll super cool. So OPEX is your operating expenses. That's what you run your business off of. That's our envelopes. Step one. Step two is we need to determine the percentages we're going to allocate to each account. Now, I'm going to do it just as an example. It's very important to understand this. This is just an example. Work with a certified professional in Profit First. We call them Profit First professionals to get the exact perfect numbers for you. I'm giving you an example. If you read my book, which is right there, if you read my book, Profit First, I have more examples in there that give you a sense of a range. But getting to the perfect numbers, I strongly encourage you, work with someone who can guide you to getting the right percentages. But it's important we get a feel for this right now. So I'm going to say maybe 10% to profit, 30% to owner's comp. We'll say 15% to paying our tax liability, 3, 4, 5. And that means 45% to operating expenses. So what you do is step 2 is for these 4 accounts, again, income is the serving tray. These 4 accounts, we're going to allocate a percentage of our income to these accounts. So in this example, let's say $1,000 comes into our income account. We would allocate 10% to profit. That's $100. 30% to owner's comp, 15% to tax, and 45% to operating expenses. So what you see here is that if $1,000 comes into your business, you then allocate it out to these different envelopes, and this is what money is available for what purpose. We're pre-allocating money to its purpose so we know its use. In the old business, where everyone told me you only have one primary account, we can just kind of erase these temporarily, we just had this one account. So you log into your bank account like you told me you do, just like I do, and say, hey, I got $1,000. What can I do with $1,000? But the reality is when we take our profit first and we allocate money to its other intentions, we realize we don't have $1,000 to run that business. We have $450. Now, I also recognize, as I show this to you, it's kind of the ice bucket challenge, right? That's where you get the shiver. You're like, oh my God, I'm surviving check by check. And now you're saying, I don't even have half that money available to run my business. And I'm telling you, absolutely, you have less than half that money to run your business. You've been running your business inefficiently and bloated up to this point, but we couldn't see it because every dollar that came in was every dollar that went out. So by allocating this money in the beginning, it's going to be an ice bucket challenge and it's going to cause shivers because it's such a dramatic change. But these are the allocations in this example that we want to allocate. Now, Holly and I have developed a method. It's called a rollout plan where you systematically and slowly move forward to the right percentages. If you abruptly adjust your business, it can be too abrupt of a change and cause damage. So this is step 1. Set up the envelopes or the accounts you do at your bank. Why this has to be at your bank and not on a spreadsheet, not in your accounting system, is because this intervenes with your natural path. Most people responded when I asked, how often do you check your bank accounts? And you said daily. I know where you're going to, and this has to be where you're going. If I did this on a spreadsheet, you may not even see it because you're going to your bank accounts. And your accounting system, by the way, already does this. I don't care if you use QuickBooks or Sage or FreshBooks or anything in between. Your system already has what's called a general ledger. And in your general ledger, you have all these different accounts for different purposes. So your system is already categorizing stuff. And how's that served you? If you're like most entrepreneurs, not well. My business is still lives check by check. So we can't rely on the accounting system. And I'm not saying we ditch the accounting system. We just can't rely on it. We can't rely on a spreadsheet. We have to do this in our natural pathway where we are. Okay. A major step number 2, once money's allocated here, we need to go into a technique called remove temptation. And what remove temptation is going back to those chocolate chip cookies I talked about earlier. I don't know if I talked about chocolate chip cookies. That may be, my brain might be farting. Let me talk about chocolate chip cookies real quick. I love chocolate chip cookies. I can't resist them. Some people bring them here to the office because they know my addiction to chocolate chip cookies. And I beg people, please do not bring them because I will play the same game over and over. You put a chocolate chip cookie in front of me, I'll say, nope, can't do it. Trying to get and stay in shape. And then I'll say, but it didn't hurt. It doesn't hurt to window shop. And I'll take a little sniff of them. And then once I smell, I'll say, a little nibble of one chocolate chip cookie. What's that going to do? And then I'll eat it. And then I will hunt them out and I'll eat thousands of chocolate chip cookies. I will gorge on them. The only way that I can resist eating chocolate chip cookies is not having them available. Out of sight, out of mind. And so with money, I know you've done this too. We see money piled up and say, we really shouldn't spend this. But at a certain point, the need becomes so great that we spend the money anyway. We can't use willpower to prevent us from accessing money, just like we can't use willpower to resist eating our favorite dessert, chocolate chip cookies. So what I want you to do is once you set up those 5 accounts at your current bank, I want you to find a second bank. We'll call it bank 2. And we want to set up 2 critical accounts there. One is called the profit hold. The other one's called the tax hold. And it looks like this. Well, actually, let me add arrows. As money flows from our income account serving tray to the other accounts at our core 5, we then invoke a transfer of that money from our primary bank to a second bank to hold the money. So it's $100 that's got allocated to this envelope, gets transferred and now accumulates here. This tax money that's going to be used to pay our tax bill is going to be held here until that tax bill is due. And we do this because we want the money to be out of sight and out of mind. So here's the basic rule with that second bank. No starter checks, no online banking, no ATM card, for God's sake. I want you to simply mail a check in or deposit it somehow at the second bank. And the only way you can withdraw money, and this is how it works at my bank, is if I drive to the branch, I call the bank manager out and say, please write me a certified banker's check out of this primary, this profit hold account. And I got to show my ID, and I got to spend a couple hours doing it. It's arduous enough, it's distracting enough, it's a big enough pain in the butt that I just leave the money there. And since I don't have access to it, I actually don't even know right now how much is my profit account. I have an estimation, but I don't really know. And I do know when profit time comes, and I make that one trip over there once a quarter, a big chunk of money is coming out to me that I haven't spent, because the money's just been sitting there piling up, and I've had to run my business off of the remainder, the operating expenses. And the owner's pay has been going to pay my personal income. A couple more just things about this real quick. Owner's comp, its purpose is to support your lifestyle. Too many entrepreneurs, any dollars that come out, including money that comes to pay out their taxes, any money that goes to them, and they live their lifestyle to include everything. Then when tax time comes, they don't have enough money and they panic. We can't pay it. When profit distribution time comes, there's nothing in there because there is no profit distribution. So owner's comp, almost better said, is our lifestyle account. This is the money that's meant to serve our lifestyle as a business owner. And of course, we want to grow this over time. And then the profit account is a reward and bonus above and beyond. A couple last tips. The profit account is for celebratory purposes. You are never, and I want to repeat this, you are never to plow back, push back, reinvest that money into your business. Those are all soft terms saying that that money is simply a deferred expense. It's not really a profit. I just making an expense now. I just pretend it was profit for a few months, but now it's being pushed back into the business, which means it's an expense. And your business hasn't discovered a way to properly and healthily live off the operating expenses. So when the profit comes out, the lesson is this: it is a reward for you. You can celebrate with it. You can save with it for yourself if you consider that a celebration. Go on a vacation, do whatever you want, but never put that money back in the business, because you're unwinding the discipline of running the business healthily off the operating expenses. The other thing, the tax account, as that money piles up, when taxes are due, that money goes directly to the government. So if you own an LLC, LLP, anything that owes quarterly taxes, the business likely can just write the tax out on your behalf and send that check. If you have an S Corp, C Corp, somewhere where you're receiving payroll and your personal tax bill is being deducted in part from your paycheck, then on a quarterly basis, that money in the tax account goes back to you. It's a reimbursement or a distribution to pay you back for the taxes that were deducted. So either way, it pays your taxes. Like I said, I think when we started, there's 30, I get confused. I've done so many presentations on Profit First. I can't remember if I told you this or the presentation I did a couple of hours ago. There are 30,000 companies we estimate or more now doing Profit First. We have over 2,000 documented cases where Holly, people directly have written to me, written down, we has shared how they've done with Profit First. Here was the most surprising thing. When businesses implement Profit First, for the majority of cases, they're actually growing faster than the competition. That's significant because the most common resistance I get is someone who's considering Profit First says, sounds like an interesting system, but I want to grow, man. I want to have a bigger business. And if I put money toward profit, I don't have money to invest into my business. And it sounded like a good logical point until I found businesses that focus on profit and take their profit first, following the system, are more profitable and grow faster than the competition. So of course I asked, how can that be? And here's what I discovered. When all the money you have available in that income account, all this money is spent on growing your business, we spend money on the next thing we see that we think we need to spend it on. Maybe I should do Facebook ads. Maybe I should do this. And we start dispersing the money in multiple facets. When the money first goes to profit, there is less money to spend on expenses, which causes an interesting chain of events. The first thing is, since there's less money to spend on expenses, I have to be more selective of where I spend the money. And if I spend less money, the only way to sustain that spending less money, I need to narrow down my products and services to only the ones that are profitable. I can't be offering a large variety of products and services because I have less money that's going out to bring in more sales. So I have to narrow down my offering. And if you narrow down your offering, you actually narrow down the customer set you're serving. And if you narrow down the customer set you're serving with a more narrow product and service offering, that means you've identified a niche. Now, here's the amazing thing about niches. Niches, when people see a customized solution for their category, their need, inevitably pay more, meaning more margin, more profit, so more money goes into your business, and the word of mouth in a niche is far stronger than a diverse set. So the marketing becomes inherent and the profitability goes up. And because you're focused, more people are talking about you, more sales go up. So profit and growth starts both sparking faster. So that was kind of the most exciting phenomena I found. One last thing, Holly, before I throw it back to you, as I share this with everyone, the key is this. I just taught you in less than 30 minutes what I teach. I'm going to Australia now to tour Australia. I'm going to be spending 4 hours on stage teaching this, and that's still not enough time. I just gave you a half hour's vantage point. I want you to know that I know you just kind of drank from a fire hose and you don't have everything. You need to go through this meticulously and slowly. So go through the process, but don't think because you drank from a fire hose it's not applicable or won't work for your business. That's the mistake I see. I've yet to find a business that this won't be successful with. I'm convinced it'll work for you if you get started with it. So that's my final thought. Get started today. You don't have to do the whole system, but just get started today and prove to yourself the impact this can have. All right, Holly, that was what I wanted to share, at least for now. So back to you.
Thank you, Mike. That was great information. And like you said, it's drinking from a fire hose. So
yeah.
Little overwhelming if you haven't started at all or heard anything about this. So I have some questions that have come in and I want to get into the question and answers. Okay. But one of the biggest questions that I have is how do I implement this in my business and how do I take it further? So I want to address that and then we'll go into all of the detail specific questions.
Perfect. Perfect.
I look at profit first and I look at it like working out. There's some people that they can work out on their own and they can go running 5 miles every day and they go to the workout at home and they can do it. And then there's other of us that need a personal trainer and they need somebody to show up and be accountable because I eat 1,000 cookies if they're in front of me. I'm like you. So, and then there's other people that they want to join a gym and they want to go to a class, but they don't feel like they need a personal trainer. And so what we've done is to help people implement this is we've set up a program that's like the personal trainer for them. And so what we're doing is we're launching a Profit First boot camp. And it will walk you through the steps of implementing Profit First. Included in that will be access to Profit First University, which Profit First headquarters has put together. Mike has put that together. And also our Facebook group. We'll have a Facebook group where you can connect with other people that are also implementing Profit First. And then each week we'll do a call to go through the system step by step to get you through the rollout plan and get implementing it into your businesses. And it's $14.97 for the 6 weeks. We are all certified Profit First professionals, and that assessment's a $1,500 value. So we're excited to be offering that. So let's get into the questions.
Yeah,
so
and actually, Holly, if I could just intersect real quick. Just so you ever know, Holly and I I've developed this with Holly. It's very impactful. I just want to gauge interest. So if you're interested in doing this program, just so you know, some people, Holly, too, have asked to work with me personally. I feel very flattered and blessed. I've actually stopped doing that because it is extremely time consuming. And I typically charge $10,000 a day. And I know that sounds ridiculous to some people, but that's the premium I can dictate. So that's what I ask people to differentiate who's serious to work with me or not. So the value here is tremendous. If you're interested in getting the details and learning more right now, just in the chat to say I'm interested, and then maybe Holly and I will take the responsibility to follow up with you, but we just want to gauge some interest. So type in right now, if you're interested in joining the program and participating, just tell us I'm interested. Okay, so I see Susan McCoy, Kelly, Vaughn, I see you're interested. Okay, guys, Tina is interested. Excellent. Keep it coming. If you're interested, we'll take the responsibility to get hold of you and get you the full details. Okay, Tara, I'm interested. Awesome. Awesome. All right, keep it coming in.
And Mike, I'm also going to post a link to register right now in the chat box as well. So
great. Great. So you guys have the link. If you do the link, just do me the favor and you can go to the link and sign up right now, but also post I'm interested and post in the chat. I see some people coming into the Q&A saying they're interested. Steve, I actually saw you just pop in too. Just put it in the chat because the chat we can capture and make sure we follow up with you. The Q&A, whatever, doesn't allow that. So just put I'm interested in the chat. Okay. Holly, thanks for letting me say that. I just wanted to do that.
No, absolutely. I appreciate that.
Yeah, no problem. So what are some of the questions?
Perfect. So one of the questions that we've got a few times, these came in, that Tim asks, some users of Profit First are confused with the tax account purpose. I think it's for paying your personal, federal, and state income tax. Others think in addition to personal tax, you are supposed to reimburse yourself for payroll tax withholdings from your salary. Can you clarify?
Yeah. So yes, to any tax that affects the owner, regardless of their federal, state, payroll, all the tax liability that the owner's paying, the tax account is designed to reimburse that. Additionally, if there's some overarching corporate tax, it pays that. Payroll tax for your employees actually comes out of your operating expenses. And actually, Holly, through this class, you'll learn about another technique of setting up a payroll account and so forth. There's a way to address that specifically. But the basic premise is any tax liabilities that the owners have, the business is going to reserve for that. So it's kind of a catch-all. Again, that 15% I showed in that chart I created for you guys, that's an where's the 15%? Here it is. That's an estimated percentage of your top line income that for many businesses may work. But ask Holly, as you roll this on your business, you might be at 17%. My own company, 19% is our tax withholding. Other companies, 12%. And so you will find the number that works perfectly for you.
Perfect. Thank you. Let's see. So somebody else also asked about the taxes. We're going to skip that. And then somebody else says, it's been a couple months since we finished the book, but I remember Mike saying not to use credit cards. Many of our business expenses are paid through automatic payment with credit cards, which saves us a ton of administrative time. Is there a way to use credit cards and the Profit First principles?
You can. The reason I'm not a fan of credit cards is we fall down to a pattern of no discipline, and it can be a real trap. I can't tell you how many people say, I just want to use my credit cards for the points. You know, the whole reason the point system is set up is so behaviorally we'll spend more money. It's a gamification. It's not in our best interest. That $10,000 you spend that gets you 10 points so you can get a piece of plastic. It's not, you know, the plastic gimmicky thing is not worth it. But we fall into saying, but look how many points I have. You know, if I spend another $20,000, I can get a flight from here to Hawaii. You know what? If you spend $800, you can get a flight to Hawaii and not have all the interest that you've paid in thousands more. So I'm extremely hesitant about credit cards because the credit card companies really do not have our best interests in mind. Let me be very clear about that. So that being said, yes, you can use credit cards. I understand the advantage and the convenience of it. A couple ways to do it, and these are extreme, but one way to do it is you can prepay your credit card. Literally, I can send a $10,000 check to my credit card bank and not owe them anything currently, and they'll have a $10,000 credit on there. So when I spend the money, it's already paid for. It actually, in turn, makes that credit card effectively a debit card. Is that smart fiscal discipline? No. Is that a smart behavioral discipline? Maybe. So that's one suggestion. The other thing in what I do, debit cards. I use debit cards all the time. Debit cards have an immediate transaction that will pull from my bank, so I see the immediate impact. The goal here, and why we want to avoid credit cards in the traditional sense, is we can continue the natural behavior of logging to my bank account. I log into my bank account this morning, and I do a debit card transaction. I log in this afternoon, that money's already gone and accounted for, and I can see it immediately. The problem with the credit card is I spend money on the credit card. I log into my bank account today, this afternoon, it's the same. I log in tomorrow, it's the same. 30 days later, it's still the same because it's the cycle of the credit card. And then I see it and I'm like, oh my God, all these bills racked up, and then I'm panicked. So that's the reason I want to avoid credit cards. Now you have two techniques, either go debit or prepay effectively your credit cards, and that can address it. Maybe there's another way, but those are two that I found to be most effective.
Thank you. All right, a couple more questions. Have you done this with nonprofits, and what would be different, if anything?
Yes. So I did a presentation at the Office Depot Foundation down in Florida. There were 600 not-for-profits there. Before they had me do my keynote on Profit First, they said, Mike, we love the idea of Profit First, but we want you to understand that nonprofits can't post a profit, so the system won't work. I said, well, let's make one change and it'll make it all work. And they said, what is that? I said, we're no longer going to call it Profit First. We're going to call it Purpose First. And their eyes lit up and they said, that's it. We need to serve our purpose. And so instead of having a profit account, we have a purpose account. That one subtle change did everything. And the percentages were different. Their profit account wasn't, or purpose account wasn't 10%. We made it 75 or 80%, and the rest was administrative. But we simply called it purpose first. And by doing that, it resonated, it vibrated with their thinking, and people were on board. So if you're working with a nonprofit implementing this system, or if you own a nonprofit, simply see this as purpose first. And that's how we address it.
Perfect. Thank you, Mike. And we've implemented it with some of our nonprofit clients as well. So
great.
It works well for them. So we have a few more questions. And then somebody says, I take it that my salary is operating expense and not owner's compensation. Can you address that?
Yeah, I'm sorry. They said their salary, the owner's salary is operating expense?
Right. It says my salary, which I'm assuming she's the owner, is operating expense and not owner's compensation.
Yeah, no, that's not true. So if you are the owner of the business, meaning you have equity in the business and you work in the business, the owner's comp account is your salary. That's your pay. The reason we break it out from all the other employees is because you're the most critical employee. Now, it's funny. And it's going to happen in Australia. And when I'm down in Australia, and it's happened 100 times before, when I speak at an event, I'll say, who here owns a business? Because I speak to entrepreneurs all the time. All the hands go up. And I'll say to one of the people, what's your name? They'll say, it's Holly. I'll say, hey, Holly, how many employees do you have? 10. What's the name of your best employee? And Holly say, well, Dave. Dave is absolutely my best employee. And I'll point to Holly and say, Holly, you're lying to me. You're the best employee. No one has the drive as you. No one's as committed as you. No one knows the entire business offering like you do. No one can sell like you. No one can do anything like you. So you're, in fact, the best employee. But it's ironic, if Dave wanted another week's vacation or asked for a raise, we'd probably find a way to accommodate it because he's the best employee. So his owner's comp account is designed to take care of literally the most important employee. It's interesting, once you set up this account, is that it starts changing the relationship with your business. So many business owners I know just resent their business. Every penny I make goes back into the business, and they start resenting the business tremendously. But by setting up an owner's comp account, they start realizing the business is here to take care of me. And when money flows in there, they see that their own salary is secured. And now we're protecting the true best employee. So owner's comp is for the owners. Operating expenses is used to pay the rest of the business, but not the owners.
Thank you. Do you break out operating expense further into marketing, advertising, cost of goods sold, and salaries, et cetera?
Great question. That's where you work with Holly, because the answer is maybe. It depends on the complexity of your business. Some businesses, like for example, we work with manufacturers, they need to have a materials account. They buy so many raw materials. And so if we talk in operating expenses, it gets clouded what's for what. So we start another account. Some businesses have such a big spend budget, we set up a promotions and advertising account. If you have any one big thing, so if you look at your operating expense account and there's one common expense that's over 50% of your operating expenses, in many cases, we'll set that up as its own account. And then we have another rule here too. We say, if in doubt, add an account. I find all businesses need the foundational 5, the ones we showed you. Most businesses end up with between 8 and 10 accounts.
Perfect. That's what we've found as well. So great. All right. So then we have one more clarifying question. When do you transfer over to the hold account?
Oh, great. So going back to our chart here, thank you for paying such close attention to that. This is a real-time transfer. So the money goes into our profit account. We invoke the transfer to the hold account immediately. Now, some people, the smart folks, say, well, why do I transfer from income to here to here? Why don't I just take the shortcut and go diagonally across? I'll transfer from income right to my profit hold. The reason we don't do that is transferring to a second bank can take time, sometimes 2 or 3 days. If there's a holiday or weekend in there, it can take up to 5 or 6 days in some unique circumstances. That means the money that we saw here is sitting here for almost another full week before it moves out. And if we're checking our bank account balances daily and we see the money sitting here for a full week, we get confused and say, oh, I have more money than I thought. And we start spending money that's actually invoked and ready to go for a transfer. So first we put it into its envelope. So when we transfer within an internal bank, this is instantaneous. We know exactly how much money is available for profit. Now, the danger, of course, is it's still sitting here and we do this transfer. This may take 6 or 7 days. I'm sorry, 5 or 6 days in the worst case, but it could still take time. So there's that temptation, but it's only a period of time. We know what the purpose is of the money and it's sitting there. It's like the cookie. I can say no to the cookie for a period of time. I can't say no to the cookie forever. So if we allocate it and put that cookie in a cage and say, this is not for you to eat, this is for someone else, don't touch it, Mike, I will resist longer before I cave in. And by that time, it'll be gone. So that's why we do this 2-step process. It does seem like it's an extra step, but it is a necessary extra step.
Perfect. Thank you. And Tara, yes, also that bank one profit, it will be zero most
of the time. Absolutely. Absolutely.
Perfect. Okay, so back to the offer then. So I appreciate everybody being here today. Again, our offer is that the 6-week boot camp is $14.97 for 6 weeks. We're walking you through how to implement the Profit First system in your business. In the book, if you've read the book, Mike walks you through how to do an instant assessment, and it takes 5 to 10 minutes to get your financials together and to do that. What we do as Profit First professionals is a full Profit First assessment with you, where we dive into the deeper questions that you might have about your accounts. We look through your financials for the last year. We meet with you for about an hour and a half to go over things and to come out with the rollout plan. So we do all of the work for you by doing that assessment.
And when you said you were doing that, Holly, by the way, I started gritting my teeth because like that, guys, I'm not kidding. That is tremendous value. Like the profit assessment is something we spent years developing. The instant assessment in the book is a simple guideline, but the profit assessment has this rollout plan. It's the strategy to get you to where you need to be so that you can safely get to the profit level you want. And we did a lot of research, a lot of development on that. And we continue to do that. So I just want everyone to know, Holly, like that's not like, oh, we're just throwing in an extra gumball here. This is the gumball machine. Like this is some good stuff. This is some good stuff.
Thank you. So get signed up for that today because we have a lot of interest. And then somebody else had asked, as part of that, does it include bookkeeping services? Sum of all numbers, we're a bookkeeping company. That's our main service that we offer. The boot camp is not. The boot camp is the gym membership. So we're teaching you how to do it on your own. If you want bookkeeping services, we're happy to do that for you as well, but that's where you get the personal trainer. And so if you want the bookkeeping services part of it, that's where we can do it for you. So.
And one of the questions is where is the boot camp?
Oh, the boot camp, it's virtual. So it's a webinar. It will be every week from your local computer, wherever you want to join us.
And one more thing I saw, so everyone, the call to action here is just put out I'm interested in the chat, please. That way we can just measure who to respond to. So if you haven't done that yet, please say I'm interested and we will get you the full details, the link. We can answer any other specific questions that you may have, but make sure you do that right now. This is imperative. So
fill out the registration form today and you have further questions, let us know. We'll be happy to answer those questions for you as well.
Right. So Tim acknowledging, I think Steve, I saw you post one in the questions before. So Steve, if you could just put it in the chat, that's the one thing we're tracking. We can respond to you too. So Tim, I see you. Lynn, I saw you. Good.
Thank
Tina.
you.
Okay.
And Mike, we have one more question that came in that I missed earlier. Yeah. Can you answer that real quick?
Sure.
She says, I've been using Profit First since April. My business is an S Corp and I've tried a couple different ways to figure out how to do my pay. I have a payroll account that gets a set allocation based on my payroll expenses, not including my check. How should I be handling this? I don't want my check fluctuating every 2 weeks. The fixed payroll is paying staff.
Yeah. So, all right. So if you have an S corp, one question always comes to mind. But you speak of professional. Why do you have an S corp? So just make sure you're structured properly. But that's totally outside this. Assuming that that's the right selection for your objectives and needs, an S corp will require that you are on payroll. So you will have to have a form of consistent pay, typically within what's reasonable if you had a replacement come in for that position. That money, that pay you're getting does come out of the owner's comp, right? So make sure that the percentage you assign to your owner's comp can consistently cover that, plus a little bit. You want a little bit of reserve in the owner's comp account, just in case you have some fluctuation on your corporate income to make sure that your payroll is consistent. When it comes to the taxes, let's see, based on my payroll expenses, not including my check, how should I be handling it? When it comes to your taxes, the tax account for your business will send you a distribution, usually on a quarterly basis, to reimburse you for the taxes that you paid out of your payroll account. Now, again, your income for your business will vary. Your pay, just like your employees' pay, should be, I can't think of a reason it wouldn't be, consistent. I mean, I guess you could adjust it over a year here or there, but usually it's the exact same amount. So the percentage that you're contributing into your owner's comp account, of course, has to address that. I suggest putting, when times are good, putting that money in plus some, so that when times are a little slower in your business, you have enough money to cover that fluctuation. I hope that makes sense, Megan.
And Tim says, say that tax reimbursement comment again.
Yeah. So yeah, and this is I totally get this. Like, this is the confusing part. So back to this. This is the tax account. This money that goes in here, the majority of the money is to pay back to the owner for their tax liabilities. Now, if you own a company that has a quarterly profit, a quarterly tax installment due. I own an LLC. I'm just thinking of my other company. Both are LLCs. We send in quarterlies. When quarterlies are due, my company writes the check on company letter on a company check and sends it in on my behalf. You know, my social security number's in there and so forth, and pays it directly. That's how the tax account works. If you have an S corp or a C corp, Megan has an S corp, that money gets withdrawn out of Megan's paycheck. So she gets a paycheck from the business, but she'll see deductions in there to pay her taxes. We add up all those deductions over that 90 days, a quarter, and we say it's $5,000. The business then does a $5,000 disbursement from the tax account to Megan and says, hey, Megan, here's a $5,000 disbursement. And your accountant, Holly, can walk you through this. There's a way to do it properly, but it's a disbursement in a case of an S corp or C corp. I call it a reimbursement for the taxes that you were paying. Hope that helps.
Thank you. And one more question. Sorry, they keep coming.
One more.
We've got a few more minutes. So any difference in the use of a profit account in a partnership, or if you want to do profit sharing?
Yeah. So a profit account is profit for your corporation. If I say there's $100 in here, as just for an example, and I have two partners in the business, and one has 60% ownership, another one has 40% ownership. Just like if I had 60% of stock in Ford or 40% of stock in Ford, I would get 60% of this. So $60 if I had the 60%, or $40 if I had the 40%. Now, the nice thing about small business is you don't have to divide money up directly based upon equity. You could come to an agreement saying, hey, any profit we're going to share equally among the partners, or we're going to distribute in some other fashion based upon performance metrics or whatever. But that money in the profit account is typically used to distribute to all partners in a partnership. You determine the distribution percentages or how you're going to work that. And if you want to do profit sharing, so our company, we have 12 employees. We do profit sharing. The money from the profit account, we basically made them collectively another owner. So just, I'm making this up, but say my partner and I own 50-50. We don't. And by the way, I'm not a big fan of 50-50 ownerships. I think there always should be a majority owner, but that's just me. I have a book called The Toilet Paper Entrepreneur where I talk about that, but neither here nor there. So, but just for ha-has, we'll say it's a 50-50 ownership. While we reduced ourselves, we'll say for ha-has 40-40, and our employees are a 20% owner. Now, this is just figuratively, this is not real, but when it comes to the profit distribution, they're getting 20% of that's in there. My one partner gets 40 and I get 40. And that's how we're doing it. So make them another owner in the business, figuratively speaking, and then you share that distribution with your employees. And that's how you do a profit share.
Perfect. Thank you. All right. One last question. I keep saying that.
Yeah, I know.
We have time so fast. We have time for more.
We do have time for another. Yep.
We are a landscape service company. Depending on weather, war, etc., our business can do great or not so great. We don't want to lay off our key employees as we would lose them and have to start over. We find work for them to do no matter how small so they still get a paycheck. Are you telling me we have to take a loan out to cover this when we have money sitting in the profit account? Question.
Oh God, no loans, please. No, I'm definitely not saying take a loan. But what I am saying is in a seasonal business, you need to set up another account. Holly and I call it a drip account. And here's how it works. I assume your good season, if you're in a landscaping or lawn care business, is during the summer, spring and fall is probably your big one. Summer's pretty good. Winter probably blows, right? So if you have 6 months of the year to 9 months that are good, but we'll say 6 months just to make it easy. 6 months that are good, 6 months that are bad. The 6 months where money's good actually has to cover the full year. So when money comes in today, I would put it in the drip account and then it would go back out and get distributed to the other accounts on a periodic basis. Just to make it real simple and make it super simple. Let's say you had 1 month that was a good season. So like you're a seasonal business, you make all your money in December for the holidays. All the money comes in, the rest of it's dry. I would take that money that came in December, put it into a drip account, and then on January, 1/12 of it would come out and go into my business, and I'd run my business off it. In February, the next 1/12 would come out, and then March, and so forth. In a seasonal business, when you have a big clump of money come in, the natural tendency is to say, okay, we can do all this stuff with this much income. We can hire more people, better equipment, and so forth. The reality is actually you got to constrain it during the summer a little bit more because people don't, and then stretch it in the winter. So we put in this drip account and the money comes out slower, more deliberately. And the business, by doing this, will show you exactly what money is available at this time for real. I'm definitely not a fan of a loan. If you take a loan, you're basically telling your business you haven't designed it properly yet. Therefore, you need to take someone else's money to make your business run. And that's a big danger zone. We got to figure out how can your business run profitably without borrowing money. That's the definition of a truly healthy company.
Perfect. That's it, Mike. Thank you. That's our final question for real this time. So thank you. We appreciate you being here. We really appreciate all of the attendees for being here as well and for taking the time out to better your business. Again, I will post the link in the chat box if you want to sign up for the boot camp today. We're looking forward to starting that and to helping all of you become more profitable. Yeah, and put real quick, I'm interested in right now. This is literally your last chance if you want to get this, sign up for the boot camp and get the bonus. This is the last chance, so do it right now if you're interested. We'll get you the details. I saw a question come in from Chris. Mike, what about loans for growth? Here's my response to that. Loans for growth are good only if you can prove to me that it will result in more profits. Too many people say, yeah, I want to take a loan for growth, but don't know what the growth plan is. Or they just assume, I'll just run more ads and don't make money. If you have a proven model that drives profitability, then a loan is good because you're proving, you're creating an ATM. You're taking some money for a guaranteed return. So that's the answer to that. Again, I saw another person interested. If you're interested right now, say you're interested. And if you want to become a PFP, please ask Holly, just put you in touch with me. And then, or you can email me, Mike@ProfitFirstProfessionals, Tim, and I'll gladly answer that for you too. Okay. We got to get out of here. I'm going to shut us down. Thanks. Bye-bye.
Cool. See y'all.